Hi everyone, Angie with Angie Home Loans and Nexa Lending. Welcome back to the Home Loan Roadblock series where we go over some of the more common reasons people get denied for home loans and then give some practical advice and strategic maneuvers to work around those issues. Today is episode 4B and we're going to go over job changes, when they help and when they hurt. So let's dive in, guys. Have you been thinking about changing jobs while buying a home? Before you do, please watch this because one decision could make your mortgage process a lot easier or a lot harder. A job change doesn't automatically mean you can't qualify for a home loan. In fact, sometimes changing jobs can actually improve your situation. The key isn't simply changing jobs, it's understanding what kind of change you're making and what the lenders are looking at. So, for example, if you're a teacher who takes a teaching job at another school, or you're a nurse moving from one hospital to another, or you're an accountant who accepts a better accounting position, those types of job changes are often much easier because you're staying in the same line of work. But let's say you've worked in an office for the last 5 years and tomorrow you decide to become a commission salesperson, or you quit your W-2 job to start your own business. Now the lender has a very different picture to evaluate because your income history has changed or your job history has changed. On the other hand, getting a promotion with a raise at the same company, that's usually not considered a job change. It often strengthens your application rather than hurting it. So another thing that people don't realize, going from hourly to salary, salary to commission, or adding bonuses and overtime that you didn't normally have can also affect how your income is calculated. And later I'm going to go further into the different types of income and how those are calculated on the back end to give you a better understanding of that. But that's why it's so important to talk with your lender before making a big employment change if you're planning to buy a home. So what can you do? If possible, wait until after closing to make a major career change. If you are changing jobs, try to stay in the same line of work. That's really important. Keep documentation like your offer letter, pay stubs, or employment contract. And if you're not sure whether the change will affect your loan, ask first. A 5-minute phone call can save you weeks of headaches, guys. And like I've said before, my consultations are completely free. I'm a one-woman show. You're always going to get me on the phone or by email, and I can answer these questions pretty easily for you. So in closing, every employment situation is different. Don't assume a job change means that you can't buy a home. It may not be a problem at all. In the next episode, we'll talk about self-employed borrowers and why qualifying for a mortgage can look completely different for them. Thanks for watching, you guys. I hope you hit that follow button so you don't miss anything, and I'll catch you in the next episode.